As the U.S. markets are closed for the weekend, we are looking at the final figures from Friday, November 14, 2025. Datavault AI, ticker DVAI, finished that session in a spectacular blaze, closing at $1.83 per share. That was a massive gain of 29 cents or 18.83% on the day. But the story didn't end there. As soon as the bell rang, the after-hours traders took over and the stock immediately began to fall, dropping 8 cents or 4.36% to land at $1.75. This is the kind of whiplash that defines speculative microcap trading. The expectation, seeing an 18.83% pop on a stock with AI in its name, is that this is a breakout. This is the moment that traders on the Robinhood app or SoFi Invest platforms dream of. They think they've found the next NVIDIA stock before the rest of the market. But the reality is that 18.83% jump was not a reaction to good news. It was a speculative fever dream based on a flood of company press releases, a meme coin announcement, and a desperate gamble ahead of an earnings call. The real news, filed quietly in a 10Q document on the very same day, was an unmitigated financial disaster. Let's establish the common ground, because the narrative Datavault AI is selling is incredibly compelling. We are in a market where anything related to artificial intelligence is treated like gold. The hype is immense. Investors are absolutely desperate to find the next big thing, the microcap that can deliver 10,000% returns. They aren't content with the steady, proven growth of an Apple stock. They want the explosive, life-changing lottery ticket. And Datavault AI sounds like that ticket. Their press releases are a masterwork of buzzwords: AI-driven data experiences, Web 3.0, tokenization of real-world assets, acoustic science, and data valuation. This is a story engineered to perfection. The company has been flooding the wires with announcements, talking about 467% year-over-year revenue growth in a previous quarter, announcing a massive $150 million strategic investment, and projecting audacious revenue guidance of over $200 million for 2026. This is the expectation. But here is the challenge, and it is the most important part of this analysis. You must separate the company's press releases from its SEC filings. The press releases are marketing. The SEC filings are the law. And the 10Q quarterly report that Datavault filed on Friday, the very same day the stock popped 18.83%, paints a reality that is completely, terrifyingly at odds with the hype. Let's dig into that recent stock action. That 18.83% move was almost certainly pure speculation ahead of the company's Q3 conference call, which they announced will be held on Monday, November 17th. Traders were buying the event, not the results. The actual results, as detailed in that 10Q filing, are catastrophic. For the third quarter, Datavault AI reported total revenue of $2.9 million. This is up from $1.2 million a year ago, and that's the number the bulls will cling to. But here's the reality. To generate that $2.9 million, the company had operating expenses of $14.9 million. This led to an operating loss of $14.8 million. It gets worse. After all other items, the company posted a net loss of $33.0 million for the quarter. Let me repeat that. They lost $33 million on $2.9 million in sales. This is not a growth company. This is a cash incinerator. This is the kind of balance sheet that would make any manager at Fidelity or any advisor setting up Schwab Intelligent Portfolios run for the hills. Now, let's talk about the fuel for this fire. Why would anyone buy this? Because the company is actively courting speculative retail traders. On November 11th, Datavault announced it would be distributing Dream Bold Draft meme coins to all its shareholders. This is not a dividend. It has no financial value. It's a pure, unadulterated gimmick. It's a signal to the meme stock crowd, a way to build a diamond-handed community, and perhaps more strategically, to create a short squeeze scenario. The company is even in active litigation against a known short seller, Wolfpack Research. This is all part of the narrative, us versus them. The shorts are trying to destroy us. Hold the line. It's a performance, and on Friday, it worked. But the after-hours drop of 4.36% shows that as soon as the closing bell rang, the professionals and anyone who actually read the 10Q started selling. They saw the single most terrifying number in the entire report: Datavault AI's cash position. As of September 30th, 2025, the company had only $1.7 million in cash and cash equivalents. This is a company that just posted an operating loss of $14.8 million in a single quarter. They are, for all practical purposes, out of cash. This leads to the next critical piece of reality: dilution. How does a company with $1.7 million in cash and a $14.8 million quarterly burn rate keep the lights on? By printing and selling stock endlessly. The 10Q reveals that on September 30th, there were 217.2 million shares outstanding. By November 11th, just 6 weeks later, that number had ballooned to 285.2 million shares. That is a 31% increase in the number of shares in less than 2 months. This is the silent killer for anyone doing self-investing. While you were holding your shares hoping for the pop, the company was diluting your stake by nearly a third to fund its own survival. This is why that $150 million strategic investment from Skylex Holdings is so critical. The company needs that cash, but even that is just part of the expectation. The press release states it's pending shareholder approval. It is not a done deal. If that deal falls through, the company will have no choice but to engage in even more toxic dilutive financing at pennies on the dollar, crushing the very investors on the Robinhood stock trading platform who believe they're holding the next big thing. So, what does Datavault AI actually do? This is where the gap between expectation and reality becomes a chasm. If you read their investor updates, you believe they are a high-tech AI and Web 3.0 powerhouse. They talk about 2 divisions. First, an acoustic science division with patented tech for data over sound like ADIO and crypto anchors for real-world assets. Second, a data science division focused on high-performance computing, AI-driven data valuation, and building exchanges to tokenize assets. This sounds like a revolutionary, high-margin, scalable software business, the kind of company that should be the next Tesla stock. But the 10Q tells a different story. Of the $2.9 million in Q3 revenue, $2.2 million came from live events. This revenue is from their May 2025 acquisition of CompuSystems, an asset purchase. Datavault AI is not, at this moment, a high-tech AI company. It's a trade show and event services business that is being funded by a high-tech AI story. This is the core disconnect. The money is not coming from the futuristic tech, it's coming from a legacy, low-margin business, and even that isn't enough to stop the $33 million net loss. This is not an investment. It is a trade on a story, and the story does not match the books. This is a stock for high-speed day trading on a platform like Interactive Brokers, not a long-term hold in a Fidelity brokerage account. Comment below with your thoughts for Monday. Will the Datavault AI earnings call be a hype event that sends the stock over $2, or will the 10Q's reality, the $33 million loss, finally sink in and send it tumbling? Looking to the future, the expectation is clear. The bulls, the meme coin holders, are waiting for the conference call on Monday, November 17th. They expect the CEO to spin the narrative, to ignore the losses, to hype the $200 million revenue guidance for 2026, to talk about the Skylex deal as if it's done, and to bash the shorts. They are hoping for a short squeeze that sends the stock to $3, $4, or $5. But the reality is a company on a financial precipice. The Monday call will be an exercise in survival. The only questions that matter are: 1. What is the exact status of the $150 million Skylex financing, and when will the cash be in the bank? 2. How does the company plan to stop its $14.8 million quarterly operating loss with only $1.7 million in the bank? The $200 million guidance for 2026 is meaningless when you don't have enough cash to survive the next few weeks without dilution. This is a binary gamble. If the Skylex deal closes,